Hello, everybody. It's Stuart Noakes, Head of Tax at Carpenter Box here, following up on the spring statement that we had yesterday. If you think back to October 2024 and the budget that we had then, it was described in many circles as a tax on business. And there was some speculation that we might see some rowing back on some of the measures that had been announced back then. But I think it's fair to say that as a result of the spring statement, we've heard nothing at all. So what I might do is actually remind you all about some of the changes that are due to come into effect quite imminently now that will have an impact on businesses. In fact, in the spring statement, a lot of it was focused on welfare spending, and in part trying to get part of the population back to work and less reliant on benefits. So I think it's worth reminding ourselves that there are some changes afoot that are going to come into effect on the 6th of April 2025 in a few days' time that affect the employment of such individuals. One that I'm sure we're all aware of is the increase in employers' national insurance. And what we will see is a general increase in the rate from 13.8% to 15%. And we also see a lowering of the threshold at which the insurance kicks in from 9,100 to 5,000. So if I was trying to quantify that, for somebody on, you might say an average wage of around 33,000, what it's going to mean is that the cost of employing that individual to the employer company is going to go up by around about £900 a year. So you think, well, what we can see is that at a time when government on one hand talks about the importance of trying to get people less reliant on benefits and back into work, that the cost of employing individuals is going to go up at the same time. This is also compounded at the very bottom end by an increase in the national minimum wage. The rate is going up from 11.44 to 12.21 an hour. So that's about a 6.7% increase in the cost of employing people who are on the national minimum wage, compounded by the increases in national insurance. So that is something that is going to impact all employers. It is offset to some extent by an increase in the employment allowance, which is a deduction against a business's overall national insurance, employers' national insurance liabilities. The employment allowance is increasing from £5,000 a year to £10,500 a year. So you kind of break even if you're thinking it's £900 for an average employee. The cost of the increase in the cost of employing them. This increase in the employer's allowance equates to about 6 people on an average wage. That's the way that that I would look at it. So what we're going to see is no change into the imminent cost of imminent increasing cost of employing people. Something else, significant cost that business faces is things like business rates and utilities. And there had been some speculation that businesses might get a bit of a helping hand in that direction. Again, there was nothing that I could obviously see in the spring statement that was going to offer some extra support. So that will continue to be a major cost that that business faces. And in terms of growth, we've seen that the projection has just been halved. After the budget last year, growth this year was projected to grow by 2%. That projection has now been halved, and as I say, it's the current projection is just 1%. So maybe we can see the impact, the true impact that the policies that have been introduced are going to have on on business going forwards. And the changes haven't just been introduced for businesses itself. It also there are a number of changes that will affect business owners. A handful of tax changes. We've got a increase in the rate of capital gains tax that from the 20% to 24% that came into effect in October last year. But for many business owners, they've considered that a special rate of capital gains tax might apply to them. And the relief that we refer to now is business asset disposal relief, formerly called entrepreneurs relief. That has been a special rate of tax, capital gains tax of 10% on, you might say, a lifetime gains allowance of £1 million per individual. That special rate of 10% is due to increase to 14% on the 6th of April 2025, and then in a year's time, on the 6th of April 2026, it is going to go up to 18%. So if we look at a differential in tax rates between 18% and 24%, that differential is 6%. And if it applies to gains of £1 million, one might say that the continued prize on offer for being in business is perhaps 60,000, 60,000, you might say, reduced rate of tax over someone's lifetime. Another big change affecting business owners and farmers alike is the change in inheritance tax. And it still looks like we are a year out, and from the 6th of April 2026, there will be some quite significant changes that will affect business owners. A restriction on the application of business relief that will impact people who have shares in companies and interests in business. At the moment, the value of those interests in many cases is in effect 100% exempt from inheritance tax. And in a year's time or so, where the value of those interests exceed £1 million, the inheritance tax relief is going to be halved. So with an inheritance tax rate of 40%, what we will see is an effective rate of inheritance tax of 20% on many people's businesses. So we have had no changes announced or nothing indicated that there's going to be any relaxation on that front. So that is something that many of our clients are actively planning for. And you might say that the final tax change that could have a significant impact on our clients is the bringing of unused pension savings and subjecting them to inheritance tax. And what we know or what we expect is that from the 6th of April 2027, that if an individual dies at some point after that date, holding unused pension savings, that those unused pension savings will form part of the estate that is subject to inheritance tax. And again, with many business owners having pension savings that approach £1 million or so, then it's a significant amount of their overall savings that overnight will be brought into the catchment of inheritance tax. So my summary of the spring statement is that there was very little contained in that spring statement that you could be said was going to affect businesses and business owners, but we still have to be very, very mindful of the changes that are imminent, or the changes that are due to be introduced over the next couple of years, because they will have a significant impact. And what it will mean is that businesses and business owners will need to continue to look at their situations and recalibrate where appropriate. So that's my update on the spring statement and what it means. So very little change. So it's really just been a reiteration of the message that we gave last year, and a continuation of what we think the new world's going to be on that front. So thanks for listening.